So for part 3, we need to calculate earnings per share. Now, if we go to the textbook, chapter 13 on page 563, it covers earnings per share, and it gives us the formula for earnings per share. And that formula is net income divided by average number of common shares outstanding. Now, to get the average number of common shares outstanding, we need to go to the balance sheet and take a look at the common stock account. Now, notice the common stock account balance for both years is $90,000, and the par value of the common stock account, the par value of the common stock is $10 per share. So the way we let's do a short calculation here on Excel. EPS and the formula again is net income divided by average common stock or common shares outstanding. Now, when we look at the common stock balance, common stock account balance for 2013, that balance is $90,000, and it also is $90,000 for 2012. And then we need to use the par value per share, and that amount is the same for both 2012 and 2013. That's $10. And so the way we get the number of shares outstanding at the end of the year, which is when these balances are for, is to divide the common stock account balance by the par value per share, and that would give us number of shares outstanding. And so I'm just going to use a simple formula here. I'm going to take the common stock account balance and divide it by the par value per share, and so we can see that there were 9,000 shares outstanding, and I'm going to copy that formula over to 2012. Now keep in mind that the 2012 information, basically, since we're working with ratios for the year 2013, for many, if not most, if not all of these ratios, we're going to need information from the beginning of 2013 as well as at the end of 2013. And the way we get the beginning information for the year 2013 is to simply look at the end of 2012, because the end of 2012 obviously is December 31, 2012. And so the next day, which is January 1, 2013, the information on December 31, 2012 will simply carry forward to the new year. So what that is telling us for this calculation is that the beginning number of shares for 2013 is 9,000, because that's the number we just calculated for the end of 2012. And the ending number of shares for 2013 is calculated right above is also 9,000, and we need to calculate the average number of shares outstanding. And so the way we would do that is to add the beginning and the ending number of shares outstanding for the year and divide by 2. And as you might be able to tell, since we had 9,000 at the beginning and 9,000 at the ending, our average is going to be 9,000. And that calculation is to take that subtotal and divide it by 2, and it gives us 9,000 shares, which is our average number of shares outstanding. And so to calculate our earnings per share, again, going back to the textbook definition on page 563, earnings per share is calculated by taking the net income and divided by the average number of shares outstanding. And so our net income for 2013 is up above in the income statement up there. And so we would take our net income of 12.6 and divided by average number of shares outstanding, which is 9,000, and our EPS, or earnings per share, for 2013 should be calculated by, again, taking our net income and dividing by average number of shares outstanding, or 1.4. And what that really works out to, this is net income is expressed in dollars, shares is expressed in shares, and so the earnings per share would be an amount that we want to express in dollars, and so that amount would be $1.40. Now I hope that makes sense. Let's put it into the Connect worksheet and see if it works. And so our earnings per share is $1.40 for 2013. Now this is interesting. It's also asking us for earnings per share for 2012. Now let's see if we have the information we need to calculate it for 2012. Now it doesn't look like they are giving us the information we would need to calculate the beginning number of shares for 2012, which is not good. So we need to make a little assumption here, and that assumption is that since the number of shares did not change from the beginning of from the end of 2012 to the end of 2013, I think we probably need to assume that the same holds true for the beginning of 2012, which would have been the ending of 2011, through the end of 2011. So bottom line here is that we're going to say that the beginning number of shares outstanding for 2012, which would have been 12 at January 1, 2012, is 9,000, and we have already calculated that the number of shares outstanding at the end of 2012 is 9,000, and so the subtotal is again 18,000. We would divide that number by 2 to get the average number of shares for 2012, and that would be 9,000 shares. So again, we would do the calculation, except of course for 2012 net income was $9,800. Average shares were 9,000. And so if we copied our formula over, we would get an EPS of $1.09. Now let's see if the $1.09 is going to work for us on our Connect worksheet. And let's check the check my work link. And let's hope this is going to be correct for us. And it is. So sometimes it works out that way where you might not be given all of the information that you technically need to do a calculation in the problem, but sometimes you need to think about it a little bit and do a little bit of inferring and I guess a little bit of assuming, and go from there. Go with your best hunch, and that was my best hunch, and it seems to have worked. Now the second part of number 3 again asks the question, does the trend look good or bad? Well, the question really is earnings per share going up or down? And in general, the company would want their earnings per share of common stock to go up, because then it makes their stock that much more attractive to potential investors in the corporation. And so I would answer that as good. And again, we can do a quick check, see what how that stacks up to what the book is saying. And the book says yes, it's a good trend. Okay, let's take a look at number 4. There's number 4. And number 4 is asking for, let's see, ROE, return on equity. So number 4 says stockholders' equity totaled $100,000 at the end of 2011. Did it give us that information for number 3? No, it didn't give us that information. But for number 4, it's telling us, it's giving us a bit more information for the previous year, 2011. So you can guess, I guess, that for this calculation, we're going to need beginning and ending information for both 2013 as well as for 2012. So stockholders' equity, if we go back up to the balance sheet information, and let me see if I can make this visible all the time. Here we go. That should be better. Okay, if we go back up to the balance sheet information in the problem, we can see that our stockholders' equity is comprised of 2 accounts, the common stock and the retained earnings. So I guess we should probably put that information here on the Excel spreadsheet, ROE calculations, and if we go to our textbook, let's see, also on page 562 and carrying over to 563, it talks about return on equity, or ROE, and it gives us a formula, and that formula is net income divided by average stockholders equity times 100. And you know, in any formula like that, the reason we multiply by 100 is to turn our whole number or our decimal into a percentage. But the basic formula really is to take net income and divide it by the average stockholders equity. And so let's see, what information do we need here to get our stockholders equity? We need our common stock, par value 10, and our common stock balance at the end of 013 is 90,000. End of 012 is also 90,000. And we also need our retained earnings balance. At the end of 013 it was 33.5, and at the end of 012 it was 27.5. And so if we add the two together, that would give us the total stockholders equity for the end of each of those 2 years. And we can copy this formula over. Now we have the components we need. Well, we don't have all the components. We need one more component. We have, just as we did it up here, beginning plus ending subtotal divide by 2 to get average. We need a similar calculation. We need beginning stockholders equity, and the beginning stockholders equity for 2013 is again the ending stockholders equity for 2012. So that's going to be 117.5. And the ending stockholders equity for 2013 is the amount up above, the 123.5. And we add those two together, get a subtotal. And just as we did up above, we divide by 2 to get the average stockholders equity for 2013. And so we take the subtotal and divide by 2, and that gives us the average. Now for 2012, the beginning shareholders equity or stockholders equity is the balance of stockholders equity at 12/31/011, and that information is given to us in the question. And that information states stockholders equity was $100,000 at the end of 011. So that's that information. So that becomes our beginning stockholders equity for 2012. Then that's going to be 100,000. And our ending stockholders' equity is the amount up above. I put in one too many zeros there. We get a subtotal of beginning and ending and divide by 2, and this is the formula we want here to get our average stockholders equity for 2012. And calculation is similar to what we did in number 3. We take our net income for 2013 is 12.6. In this one, to calculate ROE, or return on equity, we divide by average stockholders equity, which is this amount, 120,500, and our ROE for 2013 is calculated by taking net income and dividing it by average stockholders equity, and that number is 0.104. And so again, remember that formula said to multiply that amount by 100, and so what that basically does is convert it to a percentage. And what I'm going to do here is use Excel formatting to convert that number to a percentage, which is going to be 10.46%. I'm going to do the same calculation for 2012. Net income is 9,800. Average stockholders equity is up above 108,750, and bring this formula over, and we can see that our ROE, or return on equity, for 2012 was 9.01%. Actually, for both of these, we have both years here, and so I really should show that we are looking at both years here. Okay. And like we did for the others, let's see if this information is going to work for us. Return on equity, number 4A for 2013, 10.46%, and rounding to one decimal makes it 10.5. For 2012, 9.01 makes it 9.0 rounded. Is this trend going in the right direction? Is return on equity going up? Yes it is. It went from 9.0 to 10.5. I would say yes. And let's check my work. And we are okay on number 4. So that completes numbers 3 and 4 in this segment. Next up would be 5, 6, 7, and 8. I'm going to cut this off for now and continue later.